Hello and welcome to this podcast from the Professional Practices and Financial Services team here at Safri. My name is Jamie Lane. I'm a partner and head of the group based in our Bournemouth office. Today, I've got the pleasure of being joined by Andy Palmer, who's an executive director and runs the Professional Indemnity team within Gallagher Specialty based in London. In this episode, we'll be discussing professional indemnity, or PI insurance is better known, which has been a challenging area for most professional services firms over the past few years. We'll look at the current situation, recent trends, and discuss other areas such as where most claims are arising in the legal and accounting space, is the professional services market attractive to insurers, and key tips and advice for those preparing for a PI insurance renewal. Welcome, Andy. Thank you for joining today. I suppose the first question really is, as per the intro, really, the PI insurance market has been something that most clients of mine sort of dread the renewal cycle. They're always worried about where the premium is going. And there's obviously lots of market challenges, I imagine, that you'll be able to expand upon. But what's the market like at the moment, and how's that changed over the last few years?
Yeah, okay. So, as with most things insurance related, it usually fills anybody with dread. And the PI market, unfortunately, is one of those markets that suffers very badly from cyclical issues that come along. If you talk to brokers, we talk very much about hard market, soft market, but what does that really mean? And I think the last few years, as you say, have been particularly traumatic. And what I try and do over the next few minutes is just explain quite how that's come about. I myself, I started my career in professional indemnity back in 1988. It's all I've done for the last 35 years. And yeah, since in some interesting times. So, I mean, historically, the PI market over my career really has kind of run relatively what we call soft, in that there's been quite a large amount of competition. And as with any marketplace, it's purely supply and demand. So, when you have a large amount of capital and a lot of insurers competing for the same business, generally that means that cover's relatively easy to come about and the pricing is pretty competitive. But what we saw really sort of kicking off, certain events kicked off a chain reaction to what became almost a perfect storm. And the first thing that happened was the Grenfell disaster in West London, which had a dramatic effect on the PI market, mainly around obviously construction related professional indemnity. But it was such a wide and profound incident that it had a knock on across the whole market. And Grenfell was really the catalyst for the beginning of the hard market. What happened after that? Lloyd's themselves actually undertook a thematic review of professional indemnity business being written in the Lloyd's market. PI was number two on Lloyd's watch list for the worst performing products within the market. And basically, they took all of the syndicates to task to come up with a 5-year plan as to how they were going to get their books back into a profitable position. And I guess at that time, we probably went from having probably up to maybe even 40 lead markets to probably over the next that sort of 6-month period down to probably about 10 really serious players. And as I say, pure supply and demand. Once that capacity sort of starts to dry up, people pricing starts to go back up again. And I have to say, having worked with a lot of these underwriters personally over the last 30 years, some of these guys were pretty fearful of their jobs. A lot of them were very nervous about what sort of business they would take on and what they wouldn't. And a lot of them were subject to much greater sort of peer review and scrutiny about the business that they were writing. The sort of traditional underwriting, as it were, back 30 years ago has kind of gone out the window a little bit as it's become more of a big numbers game, actuarially driven, and, these guys working under much closer scrutiny. That kind of, we lost a lot of markets, and then the reduction in the capacity as the pricing started to go up. I mean, the financial sector within the PI market probably wasn't as badly hit, or was certainly not as badly hit as the construction sector. Within Gallagher's, we write a lot of business across not just the financial sector, but particularly construction as well. Our book is probably 60-40 construction against other professions, so pretty profound effect on that book. But the accounting sector particularly probably not came out, well, to be fair, they probably came out of the increases pretty well compared to other professions. And the lawyers market is a bit unique, and I'll talk about that a little bit more in a minute. But and then of course, once we kind of got through some of that, and then of course COVID hit, and everybody sat at home for pretty much 2 years working from home, brought in some really interesting ways of trade, and we're kind of still suffering the legacy of that even today to some degree. So where does the market sit now? I mean, I have to say, in the last 18 months, we've seen what is now becoming some dramatic rate reductions across certainly the construction sector. As I say, they were hit pretty badly. These are starting now to filter out into the wider professions. So, yeah, it's been an interesting few years. And we've won a lot of clients off the back of being able to provide services to them when they've not had such good renewals with alternatives. And I'm not going to sit here and lie that we've had clients that have unfortunately moved on a little bit because they were tough times and everybody sort of got pretty hit quite badly. But hopefully, the experience at the moment is that the market is beginning to soften again, and we're starting to see some rate reductions. So I touched on briefly that the lawyers market is slightly different within the PI market. It's a kind of market within a market. It's quite polarized in the way that the underwriters look at it. We have some very big players, and underwriters tend to differentiate their books depending on practices defined by the number of partners within the practice. So you tend to find not too many underwriters looking to pick up sole traders, and then the 2 to 5 market is relatively unique, and then again the 5 to 10s are the same. But once you get to more than 10, the market kind of opens up again, and it's more of a traditional sort of PI market placement, really. So yeah, some challenges over the last few years, but some signs that things are starting to improve.
And when you were talking about, the market kind of went from 40 underwriters down to 10,
Yeah.
are we starting to see that the market is now looks much more attractive, therefore you are seeing that 10 start to go up again?
Oh yeah, absolutely, and yeah, and a very valid point. Obviously, if premiums start to go back up again and underwriters' books come back into balance, they start to make money on it again. From somebody else looking at this from the outside, becomes a good investment opportunity. So we are now seeing new capital coming back into the market in quite a big way now, and like I say, supply demand it's pushing the supply back out there. People are competing pretty heavily, and that's what's driving the rate reductions. The other thing that we've seen that's quite unusual is as some of these companies now have the additional capacity back to write this business, that we've seen a lot of underwriter movement between companies. And obviously, like with any job, really, when somebody takes up a new role somewhere, they have to kind of make their mark. Some of the business follows them, that they have to go out there and basically justify their own existences by writing business. And the only way you can do that is to compete with everybody else. So yes, we're seeing quite a dramatic move. That's kind of creating a bit of a false level of competition, if I'm honest. But in addition to that, we are seeing new capacity coming into the market now.
So I suppose what you're saying is we can expect, as we say, the more competition, but we've not got to that sort of leveling off where you've got, a sort of level amount of capacity, sort of the normal levels of competition between players.
If I'm honest with you, Jamie, I'm not sure what I'd define as a normal level, if I'm honest with you. I mean, the capacity goes up and down. We have some people that come in and they play for a short period. I mean, the thing with PI insurance is it's a long tail business. So what you write today, you won't necessarily see the full results on the claims for probably another 5 or 6 years, whilst the claims that are notified kind of manifest themselves. PI claims generally take quite a long time to go through a system. There have been reforms to try and speed up claims process, but historically it is something that's always taken quite a long time. Whilst underwriters' results in the first couple of years might be quite good, if they've picked the wrong risk, that can deteriorate quite badly over the next few years. So it's difficult. You see people come in and just write for capacity, and they'll be around for maybe 2, 3 years, and maybe move that capacity into different markets, depending on what other markets are doing. The PI market and the financial services, the D&O market as well, has been pretty volatile over the last 18 months. And I think what we will see maybe is like the last soft market probably lasted for way longer than it should have done. I think what we might see over the next few years is a little bit more volatility in the market, maybe in certain sectors. So it'll be interesting to see how it kind of manifests itself.
Yeah, okay. What areas are PI insurers from a professional practices perspective? Are there any specific areas that they're most concerned about? I mean, a lot of my clients talk about sort of conveyancing as one of the key risks that insurers are asking them about.
Yeah, insurers, particularly in the lawyer sector, insurers are a little unusual. I guess a lot of their books go through kind of a lot of actuarial analysis. Conveyancing is something that is generally seen as to be quite a hot topic within the lawyers market, particularly. Tend to find practices that are involved in any more than kind of 25% conveyancing, either commercial or residential, do kind of fall outside of a lot of markets' appetite. So as you start to lose insurers, that can cause the pricing to go up. Quite a lot of concern around fraud concerns in the market still on some of the smaller risks. Lawyers tend to carry quite large client account balances, and we've had quite a few social engineering issues that are coming to bear. And again, not purely PI, but kind of linked to the same market. Cyber insurance is becoming more and more of a topic in the lawyers' circle. It's something that we're working on pretty heavily at the moment. And the market generally is nervous about the kind of macroeconomic environment. What you tend to see in times of economic downturn, we do see increased litigation against lawyers, particularly property price crash would result in conveyancing losses as well. And we've seen that with particularly the up and down of the property market. So that's interesting. On the accountancy side, tax consultancy has always been a kind of issue. Any funky tax mitigation schemes are always quite interesting. I guess from a advising a client perspective, you want to be out there helping them and get your competitive edge is giving them that kind of cutting edge advice. But some of these schemes are quite interesting, and obviously HMRC look to shut them down as quickly as possible, I guess. And it's that kind of interim period where we do see a lot of notifications around those. And then I suppose the accountancy side, anything to do with PLCs and auditing, that can generally be, a particular issue. And I suppose when you're dealing with the kind of sort of larger clients, the deeper pockets, and there's just a scalability on claims at the end of the day. So, but generally speaking, I think on the accountancy side, certainly the ones that we see, I think the accountants market's quite interesting, mainly because there seem to be quite a few. I mean, there's a lot of very small accountants around, and there's some very large ones, but there's not too many that sit in the middle, which is quite unusual for a profession. I mean, like I say, we do quite a lot of construction business as well, and there's a lot of very small architects, but equally a fair spread all the way through up to the sort of top 100. But the accountancy market seems to be a little bit more some interesting dynamics.
And in terms of claims made and
Mm.
payouts across the professional practices sort of markets, I suppose what you were just saying is probably reflective of the claims experience as well, in
Yeah,
terms of tax schemes and things like that, and conveyancing payouts, and that's perhaps where the claims experience is.
yeah, absolutely. Yeah, yeah. So yeah, it goes hand in hand. I mean, interestingly, on the lawyers' side, I mean, you do find markets that they kind of have pet hates. I mean, some markets just don't like things to do with personal injury, for example, and they'll steer clear of that. We had a market a few years ago that literally de-risked themselves completely from anything involving personal injury. Went for about 3 4 years, and then bizarrely literally turned toe and merrily wrote anything with personal injury. So it's quite fickle depending on sometimes that just comes down to an underwriter's own understanding, and part of our job is to really drill down into somebody that specializes in an area to really try and mitigate an underwriter's opinion of that as far as we can, really.
So I suppose, do you have some tips on, if you were the person having responsibility to sort of get your PI insurance renewal,
Mhm.
what would you be asking them to think about?
Sure. So what we do with our clients, I mean, the one thing that we do and we like to do is start the renewal negotiations plenty of good time. So ordinarily we would be talking to a client usually about 3 months in advance of their renewal about how to put their presentation together, and it's their one opportunity to paint themselves in the best light possible, to especially practices that specialize in certain areas. You specialize in that area for a reason, and actually to be able to highlight that to an underwriter and that you've got the right risk management that's sat behind you, paint that picture in the best light, is something we work really hard on. And the earlier you can start that process, really the better. And some of the clients that we work with, and some of our clients we've held for a number of years, and we work, it's a kind of evolving tale almost. And every year we work through the risk presentation to try and keep it as fresh and up to date as possible. It's the renewal process, it can be a drag, I guess, for anybody that has to go through it. It's the sort of thing that I tend to say the more effort you want to put into it, the better the light that you'll be seen in, because we get some presentations that come in and quite frankly they're terrible. You look at them and you can see the ones where somebody's like Saturday afternoon probably watching the football results coming in, desperately scribbling out, thinking got to get this done next week, and the handwriting is awful. You can't read half of it. The figures don't add up. I mean, I always a bit of a grin when it comes to accountancy practices filling in splits of income, and when it doesn't total to 100%, you think, I'm not sure quite. I'm not sure quite where that one's going to go. But so it's sticking to the detail, really. What underwriters like to see is somebody that is taking their PI insurance really seriously, because I think you have to have it to trade, but it's fundamental to the business and it's there for your protection. So got to take it seriously. And it's the more effort you put into it and the better the light that you'll be seen in. So I think the other thing that's quite difficult with renewals is to be very careful about had any claims in the past. Claims data from different insurers or different brokers can be quite variable. So it's keeping a good track on top of the claims that you've notified or circumstances that you've notified into previous insurers. And as I said, sometimes these claims can take quite a long time to manifest themselves. The one thing that we do with our clients is work quite carefully with them to make sure that claims data is up to date. So sometimes they don't get updated correctly by insurers, or as a client, as an assured, sometimes you don't even, sometimes these things happen almost in the background and you're not even sure, some people are not even sure whether they've had claims settled against them. The one thing that the market has done, particularly maybe really over the last 2 years, is they're a lot more conscious of having proper confirmed claims data from insurers rather than from brokers, or just accepting what they're told by an assured. So the one thing that we try to do is go back over the previous years, look at who you were insured with and get up to date claims histories from the broker or the market that you were with, because the figures do move until the claims are actually closed out. And in strange circumstances, sometimes claims are reopened. So you do have to just be a little bit mindful of that. And normally underwriters like to see claims experiences at a minimum really over the last 6 years, but in most cases over the last 10. So if you think over a 10-year trading period, and hopefully, touch wood, you don't have any claims, but it's important to keep on top of that. The other thing that's always quite interesting, I think people are a little bit reticent in actually notifying issues and claims, and that's one thing you can notify. Quite frankly, till the cows come home, really, obviously you've got to have good reason to want to notify. But if you've ever got any doubts over that, then you should be speaking to your broker. But a practice that has no notifications and has been trading for a number of years almost can raise a few queries in itself, in that anybody involved in any level of business, business is not straightforward, is it? You always have differences of opinion or things that don't really work out. And particularly, I mean, again, I kind of go back to our construction background as well. Construction projects very rarely finish without somebody moaning about something. And to get a claims history in from a client that says, nope, never had any claims, that does raise a few suspicions sometimes. And you think, well, why would that make you nervous? Well, sometimes that's like maybe there are people within the organization that aren't really prepared to notify or have those conversations, or is it a practice that kind of tucks things away and doesn't want to admit to anything, and that can equally make insurers a little bit nervous.
And you mentioned earlier COVID, and obviously the world changed quite a bit and the working
Mm.
practice changed. Can you explain what about that made the sort of insurance market or PI renewals change as well? What were PI insurers looking for part of that move?
Yeah, I mean, the COVID was well. So COVID meant a lot of different things to a lot of different markets. To be honest with you, I mean, from a trading perspective for us as brokers dealing with the insurance market, I mean, obviously to do that completely remotely. I mean, one of the things that we've always kind of prided ourselves on a little bit, particularly in the London market, is that ability to go take an inquiry, walk down a road, sit in front of an underwriter, look him in the eye, have a conversation direct with him about why a practice is better than the other one, or what's happened within a practice to even make claims better, worse, or whatever. To suddenly have to do that remotely was quite tricky. COVID itself didn't really impact the PI market too much. I mean, there was an awful lot of any profession. It was probably the insurance brokers actually that came out of COVID worse on a PI basis because obviously there was an awful lot of issue over business interruption and how those claims were dealt with, and it wasn't a particularly nice time for insurers. There were one or two insurers, some fairly high profile legal cases around the whole COVID business interruption claims that caused issue. The market settled down fairly quickly, and in fact we had a whole raft of what we call lovingly called COVID exclusions across most professions. Probably didn't really impact lawyers and accountants too much. On the construction side, there was obviously delays in construction that insurers were keen to try and avoid the claims, and that's really where the COVID exclusions came from. But to be honest, I can't really think off the top of my head of any particular claims as a straight result of COVID that have really impacted anybody. And now, in some respects, it's kind of the market's kind of settled down from that. It's given us some interesting ways of trading that we didn't really have before. It's agile working. I don't have to commute into London every day, which is quite handy. But and equally, a lot of underwriters working from home. Contactability has been quite interesting. Probably not the right thing to say. Some of our old esteemed colleagues maybe used to practice and trade quite a lot in the mornings and maybe not quite so much in the afternoon. And that's kind of changed now. The kind of wine bar mentality of trading in the afternoons is gone, which is probably a good thing. So, yeah, a bit more consistency, I think, maybe as well.
Mm,
But equally, with consistency comes that ability to walk down a road and catch somebody and get a deal late on on a Tuesday afternoon kind of went out the window. But it's not as bad now as it was. So, but we are doing more and more face to face every day. And we're Gallagher's. We're really keen to do that because I think that gives us some really good results.
yeah. And one thing, sort of one last question. I think what was quite fascinating when you're saying how sort of lawyers particularly could be grouped between sort of sole practitioners,
Mm.
1 to 5, 5 to 10 partners, etc. And it's quite interesting when we look at mergers and acquisition activity in the sector and the fact that PI insurance really is becoming such a huge cost
Yeah.
at that smaller end of the market.
Mm.
And actually it drives that activity because
Mm.
it just become unsustainable, and profit that these sort of small practices can make, it gets dented so significantly by it.
Yeah, I guess, yeah, you're right. I mean, for some of the small practices, to continue to trade economically with the overheads, I mean, I guess PI is probably outside of salary spend, probably the second biggest expenditure that they have. And we're really conscious of that. And you're right, it's driving practices to, come together and I don't know. You kind of, I guess it's almost a kind of natural selection, isn't it? That fight through it. Whether that breeds a better practice, you'd like to think so, wouldn't you? It's almost like survival of the fittest, I guess.
Mm,
But it does. I mean, the lawyers' market's always been a little bit that way because of the way it operates. It's a very unusual market. Obviously, the majority of renewals are still around 1st of October, which is just the historical way that it's worked out. And I have to say, I think for a practice looking to probably achieve best renewal is sometimes worth considering coming away from that 1st of October date, because especially if you're a kind of specialist practice, I would say, because what you tend to find, obviously, I hate to say it, but the 1st of October or the run up to it is a bit of a feeding frenzy. As underwriters like to fill their books. And so what you tend to find is those with big capacities tend to put out quite a lot of quotes fairly early in the season. they'll maybe slow up a little bit for about 3 weeks, 4 weeks, and then the last 3 weeks of it, depending on how many quotes they've actually converted, they'll push quite hard, or they'll pull back altogether for the last 3 weeks. And frankly, I don't like that approach. I think because you're being herded in with everybody else, there's some good risks or good practices, well-run practices. If you don't get the timing of your renewal right, you could fall in that period where you're probably not even really being considered properly. So some of the bigger practices that we work with, we kind of move them away from the 1st of October renewal date, because I think you get a better audience with underwriters if you're away from that kind of feeding frenzy. Some of them we've moved into the next year. 1st of April started to become a bigger date for lawyer renewals, particularly. And I think the other benefit to that as well is markets tend to have more capacity at the beginning of the year. Most of their reinsurance programs run for the calendar year. So at the beginning of the year, they're quite open to looking at a lot more new business because they've got capacity to fill. They do reserve capacity throughout the year, particularly on renewals. But if you're looking to go round the market from a new business perspective, it's much easier at the beginning of the year when people have that capacity. As the year goes on, and obviously the solicitor's season is quite pivotal, because you tend to find, I mean, we had a situation it's probably about 10, 11 years ago now, where the market was a little bit tight on capacity. We got through the lawyers' season for the 1st of October, and that kind of used up what capacity was left. And we had a good 2 months at the end of the season where nothing really moved around at all, because there was no level of no capacity to move business between carriers. So that tail end of the year is probably after the solicitor season, probably the worst time to try and renew running up to the Christmas period. Something to bear in mind when you're looking at your renewal date, because we'll talk to your broker about the best time of year to approach the market.
Andy, thank you ever so much for all the insight today. I mean, there's so much science behind this that I think I certainly didn't realise, and I think the idea and the sort of phrasing around supply and demand, I think is your last point made really. It's so important to think about that and how you position yourself in the market. So I suppose utilising your broker to get that positioning correct is pivotal.
Yeah, absolutely. Yeah. Work with your broker on presentation for practices that have histories that are maybe not that great. I think the one thing, any nasal gazing is great. If you can come up with a paper about lessons learned or procedures that you've put in place to mitigate it, or things that you've pulled out of to just literally stop it, all the better. And these are the sort of things the conversations you should be having with your broker as to how can you do that. I mean, the bigger practices, I guess, if you ever get the opportunity to meet with your underwriters, go for it, because it's something that we try to do with our larger clients, particularly. Because I think when you can sit down around a table and see the whites of their eyes, it just builds a relationship. It makes broking the renewal much easier if you've had that contact. It's a lot of things to take into account.
Yeah, definitely. Well, thank you very much. So that's all for today. So as a reminder, Safri provide a range of tax compliance and business advisory services to the professional practices and financial services sector. So to find out how we could help you and your business, please visit our website at www.safri.com. Thank you very much.